let's do it. Thank you very much for popping in today for today's live market update and chart of the day on this Monday. Interesting times continue, as is the norm in financial markets. But most importantly, I hope you're well and I hope you're good on this sunny day in Perth. Thank you very much to everybody who's already said hello in the questions box. I'll just pop up this important message to remind you that this is for educational purposes only. Please remember to do your own due diligence on anything you see here. Make sure that you follow trading plans and, of course, manage risk on every trading action consistent with your trading plan and personal trading objectives and financial situation. So I'd just like to say hi back at you to those of you who have already said hello. G'day to Hugh and Mark and David. To Neil, g'day Brian, and hello to you as well, Shane. As always, as I've said, great to see you all here, and thank you for connecting to make me feel less lonely as I sit in front of this computer screen sharing some stuff with you. Let's look at the headlines. US equities trading near neutral on Friday. Greenland just continues to be a major topic. Iran just seems to have dampened down a little bit in terms of a geopolitical issue, but of course that can change in an instant. Trump's a bit upset about the lack of cooperation he's getting to after threatening to do things the easy way or the hard way in an interview and press conference last week. The Europeans have pushed back, particularly obviously Greenland and the Kingdom of Denmark. It's all a bit odd in terms of what the motivation is. The national security thing doesn't really stand up to scrutiny because of NATO's Article 5, which I think it's called Article 5, which says that if anyone attacks a NATO country, then the whole of NATO will get involved, which includes, of course, the US, as well as the European countries. It's not happy with this. There's thoughts that it might be some of the resources, it might be just an expansion, empire expanding thing as well. But anyway, what Trump has done is he's threatened to, he's targeted a number of countries with tariffs and a subsequent 25% ramp up from the 1st of June if he doesn't get cooperation to buy Greenland. The other thing, of course, that's happening this week, amongst many, is the earnings season is ramping up. We've got some data we'll talk about in a moment. Some of it is really critical. We are seeing some softness. We are seeing some relative softness in US futures at this stage. They're all slightly down to the downside, which is quite interesting to the degree to which they are. And Asian markets subsequently are following. The ASX isn't 4%. Apologies for that. The ASX is actually, when last I looked, down 4%. So let me change that. Great. Okay. There we go. We've changed it accordingly. Okay. So why is this? Well, I think the narrative is not particularly good for the narrative isn't particularly good for the start of the week. We do have this ongoing geopolitical situation, which isn't making the market happy, and on top of that, they're just, with it being that ramp up of earnings season, we are sort of seeing maybe a little bit of risk coming off, maybe a bit of risk coming off to some degree before that. If that sort of makes sense. And there is lots of data as well coming out this week, which be influential. So maybe at that. Maybe that is influential as well. There is a flight to safety thing going on also, which we're seeing in gold, which we'll talk about after we've done our headlines, and we start to have a look at some charts. So yeah, there's quite a few things going on. Right, which is sort of, as I said, I think is possibly impacting on sentiment generally. I just want to check because those futures were actually a little bit down compared to where they were when last I looked. So let me just do a quick check on something. Yeah, so the major headline appears to be the Trump tariff on 8 European countries. That is really sort of checking across some news wires here, just to see if there's anything new just come across. No, nothing new come across. There is some key data out this morning, of course, which hasn't come out yet, but is due out any moment. Anyway, back to the stories, and then we'll have a little check around and a little bit of an explanation of what's going on. In terms of the currency markets, we are seeing pause in the US dollar. We did have some strength going on, but we saw a little bit of pause, which has sort of continued into the day. Gold is at record highs again, and copper's pulled back from an all-time high. Oil has also pulled back after hitting 3-month highs last week. And on the data front this week, it is a big week as well as that earnings season. We've got US PCE, we've got the BOJ reporting, interest rate and press conference on Friday. We've got global PMI numbers on Friday as well. We've got Aussie jobs on Thursday, and today we've got Chinese GDP, industrial production, and retail sales, all key numbers. And this will obviously be influential in terms of, is there actually some sustainable stabilization of Chinese growth or otherwise? And if we look here, you can see there those numbers due out very soon, in the next 20 minutes, in fact. So if we're still here in the next 20 minutes, we might have a wee look at that. We have got some revised industrial production numbers out of Japan. That's not going to be that significant. And outside of that, really, the Canadian CPI is the only data of note tonight. We've got Juneteenth Day, of course, in the US, which I neglected to mention, which means the sort of US markets are closed. Which is it's a federal holiday. So that's likely to dampen down. Hi, Sonia. Hello, David, and Simon, and Johnny, and Lita. Which is likely to dampen down trading volumes, may make things a little choppier. Tomorrow it'll open with a vengeance, I'm sure. We'll get some big earnings out tomorrow. It is a big week. There's quite a few of the major Dow components after the bank earnings we had last week. A few of the Dow components. We do have Netflix as well coming out. Remember, with all of these Nasdaq stocks, just watch for after the bell action if you're trading Nasdaq futures. If we look later on in the week, we've got UK jobs tomorrow. We've got On Wednesday, we've got the UK CPI. We've got speech by President Trump. God help us. We've got some housing data. We've also on Thursday we've got some that Australian jobs number. Then and we've got PCE data out on Thursday, as well as US GDP. So big day on Thursday, big day on Friday, with some flash PMI numbers coming out, as well as the BOJ decision. So it's really the back end of the week that is going to receive a lot of airplay. So there we go. Now let's just check out some charts and see where everything's at. And we'll start with the Nasdaq, shall we? Just to get a feel, you can see that gap down this morning there, which has sort of kept us in a range of the Nasdaq. The S&P 500 is let's have a look at that. Let's just get rid of this. Let's just get rid of this indicator. There we go. And put the US 500 on this as well. So you can see the Nasdaq is sort of range bound at the minute. We do have higher lows still, which is sort of significant. But so just watch this one at this sort of 25,250 level, which we're testing today. At this stage, sort of looking like an ascending triangle type of pattern, but we may be moving out of that into a sort of full-blooded range. If we look at the US 500, you can see that much the same pattern really. Will come down off record highs. Let's just bring this in, and you can see that gap has taken us below the previous high low, or higher low. So we are back into this range. Very difficult to call. You would probably keep an eye on this at 6853. Look at the shorter time frame. You can see that gap down again. We are testing a level here from Thursday. Which looks of interest. If we do make any headway through this, there is a potential we might start to creep down towards this next key level here at 6853. Maybe a pause around about 6874. So some interesting movements on the indices today. So a gap down and a gap down with some significance if we just look at the US futures. You can see there, this is just as almost as bad as it's been. Nasdaq futures down 1%. You can see that softness in Europe. Some money coming into gold, up 1.5%. Copper's seen some buying today, all's pretty flat. Bitcoin's also lower. And we'll just check very quickly in terms of what Asia's doing. Asia was expected to be a soft start. Nikkei's getting hit a little hard. This is a pull down from record high on the Nikkei. It'd be interesting to see whether the ASX recovers a little bit on the back of those base metal prices doing quite well this morning. You can see China and the Hang Seng have opened soft as well. If we look at the US dollar, on the daily chart, you can see that strong run up we had. Referring to the indices, Joe, about closing the gap. Let me know. So if we look at the US dollar index, it looks as though it's got stuck at probably a reasonable or reasonably predictable level in terms of previous price action. Was resistance here, support here, resistance here. So the fact that we pulled back significantly, come up to that level and then sort of pull back again today is not unsurprising. But as I said, the US dollar is most definitely an upwards trend channel. So that's of interest. Joe's asked if I see the gap closing. At this stage, it looks like a gap and go rather than a close of the gap, rather than a gap and fade. So if we look at the S&P 500 technically, so two key things to have a look at. First of all, is this test of this level going to hold? If it doesn't, and we see a breach of the previous candle low on the hourly chart, I think we are more, it's suggesting that selling pressure is really key. Notice the volume has gone down a little bit though, from that opening foray. For me, to be interested in closing the gap, first of all, not surprisingly, would have to move above that 3898. Let's call it 698. 6898. So I'd want it to close over 6900. Nice round number. That would be the high of the day. Suggested a bit of gap closing is on, but you might see a pause. Around about 20 points to the upside. So I'm not sure. And then the lack of US Open tonight may well keep it sort of somewhere in here, even if we do get some honouring of the support level here, if that makes sense. With US dollar weakness, we're seeing gold strength again. There's gold, new high. We've breached 4600. We are pulling down a little bit off the high of the day so far. You can see that opening gap, that big candle. So we've retraced about 50%, 40% of this candle, but only about 10% of the gain. So flight to safety looks as though it could be the order of the day here, along with a bit of USD strength. The geopolitical situation is really, really, I was going to use the word interesting, but concerning is probably more accurate in terms of where I am personally. Since you've asked, so it concerns me because if it's okay for the US to do what they have done in Venezuela and potentially Greenland, if they do anything aggressive towards Greenland, it involves essentially it's a finish of NATO. It'll be interesting to see how the EU respond. But they do, in fact, exercise their right to Article 5. I can't see that happening because that's World War III, isn't it? It's US versus Europe military action. So, but theoretically, that should happen. Also, China and Russia's delighted because it's taken any focus at all off Ukraine. And China's now thinking, well, if it's okay for the US to do that, why wouldn't it be okay for us to take Taiwan? So I have personal concerns about what the end game of all of this may be. It's too early to make any of that. I also don't. If US were really concerned about national security, they've got a base there. They used to have 17 bases on Greenland. There's no reason why they can't do that again. There's no reason why there shouldn't be cooperation. I think both Denmark and Greenland themselves have both indicated that that's certainly something that they would be interested in entertaining. But as for buying Greenland or invading Greenland, both those things are completely outrageous. Just to reinforce, that's my personal opinion. Back to the plot is copper. Now, copper is going to be influenced by a couple of things, not least that Chinese GDP. It's still very much an upwards trend channel. But what we're seeing is fairly significant retracements every time we hit a new record high. That's the technical picture of the last three record highs. We hit one here, and one here. Obviously, we're seeing some buying come back in again. So it's interesting because this upwards trend channel is quite measured. Now there's still an upwards trend channel in place, but it's changed its picture a little bit in terms of having this wider channel. So again, New higher low, new higher low. So we're looking back up towards this thing, but of course the Chinese GDP number is fairly influential on copper price and base metals prices generally. And of course, if that does well, then we should see the ASX do okay as well. And as I said, that GDP number may add to the already strongly performing material sector. Here's oil. We hit 3-month highs last week, and then we pulled back. We had a doji type candle. Pull back on Thursday, pretty pausey day on Friday. You can see there, we look as though we're sort of quite happy to be sitting in this range at the moment. Short-term levels of interest, I would suggest to the low side are probably around about that 58.27. And then, of course, last week's high, which had a close, a doji candle just above it, and then open following subsequent to sell-off. So I think this is in a short-term range of around about $3 on the daily chart. It looks hard to trade oil at the moment. If you're really, really keen, at this stage it's mid-trend, so you would have to be patient. But looking at that low level there, that looks sort of interesting. That was tested, and it was the low, so it's the low from Thursday and Friday essentially. If that's breached, we could see a move down to the next key level here. That's around about 70 cents, and then to the upside, even less compelling, really. But that looks in the short term around about that 60-30 looks interesting. It's got some work to do to get anywhere near that in the short term. But so yeah, that's not looking particularly healthy. As for Bitcoin, now Bitcoin daily chart looks interesting. We've sort of been in this range really since mid-November. We had a brief move out of it, which we've given away straight away, and now we're back, confirmed back in the range in today's trading. So you can see here, there is 3 really quite brutal candles at the start of the Asian session. But this could be a pause point if we look at previous price action. So I wouldn't be jumping into Bitcoin. If we look at this sort of structural resistance that was in place, so we had a short-term range within the longer-term range, which you often see. So that's why we look at different time frames. So I'll move back into this. I'll move back below 92. Could see us again bimble around in this range where there's enough momentum to the downside. Remains questionable to actually challenge this 90,200 level, but that's sort of interesting. Right, onto the currency picture. That weakness in the USD we see down. We see in the US yen, not surprisingly, with a little bit of bounce now. Yen's obviously going to be quite choppy for most of the week as people try to anticipate. I think it's pretty well priced in. They're not going to shift, but it's going to be the narrative that Governor Ueda comes out with in his subsequent press conference and the statement. We look as though we're sort of stuck somewhere in between. So we're going to bounce off 157.50, which is interesting if we look back here. In terms of putting it into context on the daily chart, that test looks quite important. I'm just going to change the color of this candle. Let's change it to because that's the significant one on the daily chart. You can see resistance, 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 for it up, and it come back and retest now. So if we have a closer look at that, you can see that retest is actually happening. But is it just going to be a 2-candle retest on the daily chart? We're going to find ourselves back here. So we're looking for a breach of today's low to suggest there may be some selling pressure continuing. But if we do see a move back into here, then maybe 30 pips to come, 30 pip move up to retest 158 might be on the cards. Here's the Aussie on the daily chart, just come down off its high versus the yen last week. And if we look at the short term, it's not a dissimilar picture, a little bit of a gap down. We're seeing some buying, but this is, look at the length of those wicks, very uncompelling. So this suggests that another move down is now out of the question, to be honest. You probably shift this down to a technical level to around about there. You can see lots of price action here and here, which possibly explains why it stopped at this point. So I'll move through so keep an eye on 105.21 to move us back into this range. But at this stage, direction unclear. About as unclear as it gets, really. Maybe the Chinese GDP number when that comes out will influence that. Certainly have an influence on the AUD anyway. So this may be the cause of those long weeks. Let's wait to see what that China data says. We didn't have a look at Ethereum, but we can do that. I don't know. Show. Let's try that again. Yeah, I see what you mean. That's actually quite a significant move to the downside, much in the same way Bitcoin. It's a good spot, Simon. This is essentially going back into a range, it looks like. 100 looks like an important level on that. Let's have a quick look at GB pound again. Again, not a dissimilar story, but a more marked bounce in this than we've seen on other currencies. On the daily chart let's have a look at the daily chart for context, and you can see why it's bounced hard off that level. That's a really important level from a support point of view on GB pound yen. So the question is, that's probably a level we keep an eye on to the upside. Translate that back to it's very steppy. But the disadvantage is that these could be all pause and reverse levels if it does get back into this range. The advantage is it's really nice. They're really nice lines in the sand to say now's the time to trial, now's the time to trial, now's the time to trial. I'll have to see with that. Let's see if this Chinese data's out. There we go. So GDP as expected, but softer than last month. That's probably not great news for the market. Industrial production slightly up on expectations and up on last month. That's better. That's possibly good for base metals. Retail sales slightly worse than expected. Jobs data slightly better than expected. So a very mixed picture coming out of China. We're seeing a response. Copper doesn't like it very much. Let's not move much. Let's have a look at the AUD. Let's do it versus. Let's do AUD, USD. Since we haven't had a look at that chart anyway. So if we look at the chart, very little movement in that in the first couple of minutes. Might as well since we're here. So AUD versus USD has a really key level at around about 66, 65. Are we going to bounce off that? How the chart says, possibly. But this doesn't look very nice, whichever way you slice it. It's not a particularly attractive chart at all. So really quite difficult to call today. I'm wondering whether something like the GB pound Aussie might be worth a nudge, but the upside here really doesn't give me much joy. Let's look at the Euro Aussie. This is all not an atypical day for a Monday, and particularly when it's a Monday where the US is going to be shut. Could be a move up here. What's that in pippage? I don't think it's going to get anywhere near there. I think we're going to be stuck. Using the FX scanner, really, shouldn't I? Don't know what I did there. Didn't mean to. I actually like the US yen if we get a breach. 157.50. That's possibly the chart. I don't think it's going to happen imminently, and in fact, you would sort of suggest that at this stage, it maybe looks more likely to retest to the upside, to the downside. But outside of that, I just think the FX market's looking a bit ordinary right today. It's okay. It's okay not to trade. Remember. Let's check out the ASX. See what's doing okay. Paladin flying. So uranium stock's doing well. Gold, rare earths, it's resources again, isn't it, leading the way? Let's have a look at a few. Let's drag on some LYC. Let's just frame this right. Okay, so here's LYC, and you can see why LYC was one of the ones we were just checking out last week. We do have a higher move. This would be highest closed. Not seen since this candle here. In terms of its upside, you wonder whether we may get a pause here, which is sort of fits with this last time we did this. That's about 5% of the upside. So LYC looks worthwhile. It's worthwhile keeping on your radar. I'm not really interested in Tesla at this stage. Let's daily. Let's let's have just a quick look at these uranium stocks, which are going quite crazy. Paladin. Right, in terms of where this is. So this is highs not seen since September. Just feel as though this level isn't hugely compelling right where it is now. BPL looks slightly more attractive because it's got more defined levels. So we breached that. Well, we actually moved out of this range, but then sort of retested it in Friday's trading. This engulfing candle to the upside suggested quite a bit of buying pressure. In terms of upside on this, the retest will be around about 7.8%, possibly a pause at around about 4% to the upside. That's a good point at which, if you're in this, you would trail. So certainly, I probably prefer DYL over Paladin technically. WGX, West Gold Resources, not surprisingly, gold stock's doing well. West Gold's been looking great. This nice steady uptrend that we find in place, the trend continuation of this pullback we had last week. So that's obviously a good one to keep an eye on. But I think it's whichever gold, you can just about throw a dart at gold sector and see stocks that are doing well. There's Evolution. There's RMS, all very, very similar pictures. So any of the gold stocks are looking great. Outside of the standard, let's have a look at TWE. Strong candle at the end of last week. And now we've closed this gap. So the key thing is where to next with this. So as a long-term play, TWE isn't necessarily a bad thing to have a closer look at. Yeah. It's not a hugely compelling chart, but it's one that looks as though if we get confirmation of the upside, S32 looking really, really very, very good indeed. I think they're diversified in terms of what they do. Lithium stocks doing generally well again. Mineral resources is popping up. Domino Pizza worth a look at as well. There's Domino. You guys. I'm going to plot my chart in DHL for reasons we've sort of talked about. So there you go, ladies and gentlemen. I think that's probably enough of me for you for this morning, this afternoon. Thank you very much for being here. Thank you very much to Wayne and Roger and Sonia, who I see still on YouTube. So thank you very much for being there. So thanks, plus guys. If you're watching this on catch up, great that you are catching up. And I will hopefully see you guys sometime soon. Take care of yourselves. Have a great rest of Monday, and we'll catch you very soon. Bye-bye for now.